Well, hello and welcome to this Moneycontrol live stream. You're watching Morning Trade with me, Nandita Khemka. Well, over the next 30 minutes, we'll be talking about the cues for trade, the stocks to watch out for, and of course, we'll be having your queries answered by our experts. So do keep commenting on our live feed, and we'll have them addressed by our technical expert on the show. But before all that, let's take a look at what the headlines are looking like this morning. Wall Street records its worst week so far this year after the Fed's preferred inflation gauge shows a stronger than expected increase in prices, stoking higher for longer rate hike fears. Treasury yields rise while US dollar surges to a 7-week high. Europe too ended lower on Friday. Asian markets kickstart the week on a wobbly note following a weak handover from Wall Street. Taiwanese markets remain shut for the day. The SGX Nifty also suggests a tepid start for the Indian markets. Billionaire investor Warren Buffett has signaled he hasn't lost his enduring confidence in the US economy and his company Berkshire Hathaway. In his annual letter to shareholders, the Oracle of Omaha has urged investors to focus on the big picture over the long term rather than higher inflation and other factors that dampen stock prices in 2022. Should you be looking to buy into hotel stocks now amid renewed demand and push for tourism in the budget? Also in focus are IndiGo, Adani Green and Paytm. Let's first get on board our technical expert for today and discuss all the stocks that will be in spotlight. Milan Vaishnav, who's the founder of Gemstone Equity Research, is joining us this morning. Good morning, Milan. Good to have you on the show. Let's first talk about the Nifty. Well, 6-day losing streak. In fact, we've managed to close below that 17,500 mark. Do you expect some kind of recovery to kick in this week? But you know what? This morning, the SGX Nifty is giving out negative signals as usual. So where do you think the markets are headed this week?
Very good morning, Nandita. It is really nice to be here. I'll take a little bit of a positional view on the markets rather than sticking to it on a day-to-day basis. And if you look at the weekly charts, I am placing my reliance on the short-term 20-week moving average, which is presently at around 18,000 levels. So what has happened over the past couple of days that the Nifty has dragged its resistance levels lower to 18,000 from 18,300 to 400 levels. So what I feel that so long as Nifty is holding on to 17,000 say 330 odd levels, I do not expect any major breakdown and we would still remain in a broad trading range. And so far as this week goes, I expect some stability, if not a strong rebound in the market. But certainly I expect some stability to come in over the next 1 or 2 days.
Well, some stability may come in over the next 1 or 2 days. Milan, hold on. I'll be coming back to you and discussing stocks in focus this morning. But let's also go across to Bharat Gianani of Moneycontrol Pro and understand what's working for the hotel sector and should you be buying into hotel stocks now. Good morning, Bharat. Good to have you on the show. Well, strong earnings from some of these hotel stocks. In fact, we did see the budget also focusing big time on the tourism sector. Good times ahead for these hotel stocks going forward?
Yeah, good morning to the viewers. So definitely as we have seen the strong result momentum that started from the beginning of this fiscal continued in Q3 as well. Q3 being a seasonally strong quarter, we saw good results by the hotel companies across the board. So we saw a good RevPAR growth, which was led by the higher average room rates, while the occupancies have come back to kind of pre-COVID levels. But if we see the room rates really, then there has been a growth of about 23 to 25% across the hotel companies that reported the numbers. So that has drove the RevPAR really high and had led to a very strong top line growth. If we see the margin momentum, then it's pretty high as compared to the pre-COVID levels. If we see the results of the hotel companies across the listed universe, the operating margins have been higher by about 800 basis points minimum if we compare from the pre-COVID levels. So good set of results, and that has continued in the quarter gone by as well.
Right, good sort of results. So do you think this sector is ripe for a re-rating now?
Yeah, if we see the demand supply dynamics, demand is the hotel industry is really in an upcycle, and if we see the demand, it's pretty strong. That momentum has been pretty strong, and next 2 to 3 years we see a strong demand. So based on the commentaries, hotel industry typically grows. The branded space typically grows by 1.2 to 1.3 times of the GDP minimum. So if we take the 6 to 7% GDP growth, the hotel industry, the branded side is expected to grow by 10 to 12% minimum over the next 2 to 3 years. And if we see, the important factor is that the supply is expected to be constrained. A lot of smaller players have not been able to survive. They were severely affected in the times of COVID-19 pandemic. So the supply is on the lower side, which is seen in a greater pricing that the hotel companies were able to charge. And if we talk about the new supply, it will take a time. So if a new project is conceived of today, it will take at least 2 to 2.5 years to come in the system. So because of this thing, we expect the demand supply dynamics to be favorable. And although the hotel companies have seen a re-rating from the lows that they've witnessed in the COVID times, but given that there is an upcycle in the industry for the next 2 to 3 years, we expect re-rating to continue for the hotel stocks.
Well, the re-rating will continue. So which are the stocks that are looking the most attractive in this space now? Among the IHCLs, lemon trees, chalet hotels, which one would you pick and why?
Yeah, so amongst our hotel picks, we would our first pick would be Indian Hotels Company. So there is if we see, they have a presence across the portfolios. They are into luxury via Taj. They are into economy hotels via Ginger Hotels. Vivanta is there in the semi-luxury space. And if you see, there are new businesses such as Cumin and the Ama Bungalow stays. That is also really picking up. So that would be our first pick from the hotel space. Our second pick would be Lemon Tree Hotels. It's into the 4-star mid-sized the premium space, branded space that they cater to. They have a huge room inventory addition pipeline of about 30% or so. So that would be our second pick. Our third pick from the hotel space would be Royal Orchid Hotels. They also have they are also in the 3-star kind of hotel properties, and they also have a strong room inventory addition pipeline of about 25% or so. They are also looking to add hotels under the revenue share route. So that would be our third pick from the hotel space. We also like EIH that manages the Oberoi and Trident brand of hotels. The foreign tourist arrival, which was not really there in this fiscal, will come back in the next fiscal, and Oberoi and Trident having a large loyal customer base and a preferred destination for the foreign tourists will also stand to benefit. So these are our picks from the hotel space. In that order.
So those are the picks from the hotel space. Well, thanks a lot for joining in this morning, Bharat, and putting things into perspective for us. Let's go back to Milan then. Milan, since we were talking about hotels, let's shift to aviation now. There are some Pratt & Whitney issues that have returned to haunt IndiGo. In fact, IndiGo and Go First are facing Pratt & Whitney issues once again, and as many as 50 planes may have been grounded. Given the fact that IndiGo has shed somewhere around 11 to 12% over the last 1 month, what is the way forward for IndiGo on the charts? Do you see some kind of buying to come in going forward?
Well, yes, actually, IndiGo failed and inverted head and shoulder pattern after a brief breakout, and it retraced from levels close to 2170 odd stuff. And right now, we see it attempting to take support at around 200 DMA, which is placed at 1876. So I think, yes, IndiGo basically remains in a broad trading range between 1800 to 2200, and I expect it to stay within this range. I don't expect any major downsides coming into IndiGo. We might see some technical rebound from the current levels.
Expect some technical rebound on IndiGo from current levels. Let's also focus in on a Phoenix Mills. This company has acquired prime land in Kolkata. And if you look at the stock, it was up somewhere around 2.5% on Friday. This bit of news coming in, do you think this will provide a fillip to the stock on the charts?
On the charts, yes, because if we keep the fundamental developments aside and just look at the charts in isolation, Phoenix Mills has got support between 1250 and somewhere between 1250 and 1300 levels. And also, it's struggling to find some base just below the 200 DMA, which is presently placed at around 1326. So if the stock is able to move above 1325, 1330, then we might see some potential base being in place, and we can again see some sort of upward momentum in the stock.
Right, I also want to speak about Paytm. I know it's recently listed, so not a lot of historical data to go by, but a lot of news flow surrounding this firm. You know, telecom czar Sunil Mittal may be eyeing a stake. That came out on Friday, according to reports, of course. And then, you know, Jack Ma-backed Ant Group may also be looking to a pair stake in the company, given the fact that the shares have staged a 40% turnaround from its November lows. And a lot of brokerages also have a buy rating on the counter at current levels. How's the chart setup looking like? Do you think it warrants a buy now?
Chart setup are pretty neutral on Paytm. From the percentage perspective, we might have seen some 40% appreciation from the November lows. But if you take the entire listing history of the stock, it had lost quite a bit of value, and it was so deeply oversold that some pullback of this magnitude should not have come as a surprise to us. But again, the stock presently trades below its 200 DMA, and I would look at stocks whose relative strength is improving, and so long as the relative strength of the stock doesn't improve, it doesn't make sense for an investor to have that in the portfolio. So coming back to Paytm, I think upward momentum should come only if the stock is able to move past and sustain above 650, 700 zone. 650 to 700 zone remains a stiff resistance area for this stock.
Well, so those are the levels to watch out for on Paytm. Let's also shift focus to the Adani group of stocks. You know, S&P has maintained its BB Plus stance on Adani Green. Given the kind of news flow that's surrounding the group, a lot of people are asking whether it's a good time to average some of these stocks. What would you advise them to do, Milan?
Yes, I think this is something each one of our clients keep on asking me, and the only reply I have is that the charts have got very little to play, or they have got very little to say. But you can just follow the basic fundamentals and try and, if you have to average, I would not suggest putting in more than 20% of your total available money into this group, because whatever you do with this group, it's going to be extremely volatile and extremely speculative. And keeping overall exposure of more than 5 to 10% in your portfolio is something that I would not advise for this group. And even if that comes with a you might see strong rebounds of 10, 15, 20 or percentage points, but that is something that you have to let go of, because exposing more than 10%, 15% of your overall portfolio is something I would not advise. And so far as trying to average some of the stocks, again, I would go back to the same theory that you can use some 10, 20% of your available money to try and average, but that would be highly speculative in nature.
Well, so caution is what, is the stance coming in from Milan. Let's also focus in on some of the viewer queries that we are getting this morning. The first one comes in on Bajaj Finserv, and Harshit Kumar has written in. He wants to know your thoughts on this one. Now, Bajaj Finserv over the last 5 days, if I'm not mistaken, has lost somewhere around 3.5 to 4%. Do you think it's time to buy these dips, in fact, buy into these dips, or when it comes to Bajaj Finserv?
No, I would not suggest buying into the dips, because the Bajaj Finserv, basically after forming a minor double top near 1815, it's been in a declining trajectory, or falling channel that we would call it, and also it's trading below all the three key moving averages. So I would not suggest buying fresh into Bajaj Finserv until and unless it goes above 1480 odd levels, which is a 200 DMA. Right now it's trading even below that levels. So adding the stock at current levels until some signs of some potential reversals are in place, I would not advise blocking money on this counter.
Well, not advise blocking your money into this counter. I hope that answers your query, Harshit. The next one comes in from Sandeep Yadav, and he wants to know your thoughts on L&T. Over the last week, it is down somewhere around 4%. But you know, all of these construction stocks have been in the limelight ever since the budget impetus rather on capex. So you know, what would you advise investors to do on this one, given the fact that it is trading around that 2100 mark, inching towards its 52-week highs?
In fact, L&T first marked its high around 2200 sometime in December last year, and after that, it has failed to stage any significant rally, and it has just marked some incremental highs somewhere around 2250, 2270. So, and secondly, L&T has a respectable weight in the Nifty infrastructure sector, which has just rolled inside the weakening quadrant on relative rotation graph. This is a tool that we use to look at sector rotation. So coming back to L&T, it has slipped below 50-day moving average, which is placed at around 2155, and it might stay under some broad range-bound consolidation for some time. And I would not advise entering this stock again, so long as it is ruling below 2200. Some more downsides, couple of 4-5% of downsides can be expected, not immediately, but over some days, I think, on L&T.
Right, Sandeep. Hope that answers your query. The next one is coming in from Ankit Bansal, and he wants to know your view on CDSL. Now, this stock has shaved off nearly 9% in a matter of 5 sessions. How would you advise investors to play some of these stocks, Milan? Stocks like CDSL?
CDSL, yes. In fact, there are two things that I would like to comment upon. One thing would be, in general, for all the viewers that are watching, that just because the stock falls is not a reason enough to buy. That is one thing. But that something doesn't apply to CDSL, because the last phase of the downside in CDSL has not only coincided with some serious support at around 1000 levels, but it has also come with some bullish divergence of the RSI against the price. So, as an investor, one can accumulate CDSL in small quantities for sure from current levels. You may not block all your money that you earmark for CDSL, but can certainly use some 50% of your available capital for CDSL and buy it around these levels. 50%, because if the decline continues despite some bullish divergences on the lead indicators, you will have some room left to buy it from the downside. But 50% is something that you can put into the stock right now.
Right. Let's move on to the next query then. This one is coming in from Vipul Sankpal, and he has a query on Hindustan Unilever. He wants to know if this is the right time to enter into the stock. And, you know, stock has been a little bit of under the weather over the last 5 days and 1 month. Would you advise investors to take positions in HUL now?
Well, when we are talking about FMCG and consumption, one thing I would like to point out, that while I say that the markets in general may find some stability going ahead, one must not forget that the entire market is wearing a defensive look, and we have consumption, FMCG, IT, those typically traditionally defensive pockets, making strong rotations on the relative rotation graphs. And of course, when it comes to Hindustan Lever, my answer would be pretty clear. If he's looking at some trading perspective, the answer would be no. If he's looking at some positional perspective, yes, he can try and accumulate stock, just the way I mentioned about CDSL. In Hindustan Unilever also, he can start accumulating the stock from current levels.
Right, you can start accumulating the stock at current levels. Hope that answers your query. The next query is coming in on this company called Nava Limited, and it's coming in from Funny PG. He wants to know your thoughts on this counter. Should one look at buying into this stock, given the fact that it has lost somewhere around 9% over the last 5 days?
Well, it has lost 9% over the 5 days, but the reason remains that it formed a classical double top at around 278 levels. So I think that buying fresh would be advised only if the stock forms a new high only if we see some breakout taking place in the stock. That would come only if the stock is able to move above the previous high. Otherwise, I think it may continue to retrace, it may continue to consolidate and mildly correct as well. So buying at current levels in Nava Limited is something I would not advise he should wait a bit more before entering this stock.
Right, let's also shift focus to the banking pack then. Madhusudan has written in a query and he wants to know your thoughts on SBI. Now, banking stocks were the star performers last year, but now a fair bit of underperformance has come in this year, right? So, how should one go about playing stocks like SBI now?
SBI or for that matter entire banking pack, the view is pretty clear that banking has undergone some natural correction after the stupendous move that it saw over the previous quarter and before that. Coming to SBI, again, the stock has shown some signs of a potential bottom in place. And not from a trading perspective, but if you are looking even for a short-term perspective, then I think SBI can be accumulated from current levels. One has to keep a view, the levels of around 500 in mind, because any slippage below 500 might bring in some incremental weakness, but there are high possibilities that a potential bottom may be in place. Even if the trend remains on the downside, some technical rebound from current levels cannot be looked out. So SBI can be bought in small quantities at current levels.
Right, we just about have time for a couple of more queries. The next one is coming in on footwear stocks. How would you advise somebody to play stocks like Campus Activewear? This stock was up somewhere around 7% on Friday.
Campus Activewear basically remains in a defined trading range. It's in a falling trajectory. Right now, it has resistance at around 426. So if someone is buying stock at current levels, they will have to vigilantly protect their profits at around 426, or at least stay vigilant as to what the stock behaves once it goes near that level. So 426 is the levels that one will need to watch on Campus.
Right, the last query for today. People want to know what one should be doing with paper stocks now, the likes of JK Paper. How are these looking on the charts now?
JK Paper is basically, again, this is a sideways consolidating stock, and of late it has seen periods of low volatility over the last couple of, say 2 to 3 months. And it just continues to rule above its 200 DMA, which is placed at around 380 level. So JK Paper, again, there are no signs of any fresh entry into this stock. One should wait before some signs of resumption of up move are seen. Until that happens, the stock may continue to remain less volatile than the markets. It may continue to see its bands contracting and might prepare itself for a sharp move on the either side. But right now, it remains in a neutral position, so no buy or sell can be triggered at the moment.
I just want to squeeze in a last query on Vedanta. The stock price has fallen below 300. Would you advise investors to buy into this one now?
That is a little tricky thing. I would not, because we have seen some strength coming into the US dollar index. That will keep the commodities and the metal stocks under some pressure even today. However, dollar index still has got some room on the upside, and until it reaches around 106 odd levels, where it has got some stiff resistance that exists between 106 and 106.35 on the dollar index, we will see commodities and metal stock staying under pressure. They may not decline too much, but certainly up moves will find a lot of resistance. So I think before entering into Vedanta and similar stocks, one should better wait for some time.
Wait it out. Do not enter into Vedanta as of now. Saurabh Gupta, hope that answers your query. Well, with that, we're completely timed out. But before I let you go, Milan, share with us 2 of your stock recommendations for today.
Yeah, actually, I'm looking at two things. Before I'll just make one very quick comment that it's very important that we stay with relatively stronger stocks because markets are under pressure. Your investments will also suffer. But if you are, in a relatively stronger stock, at least you will show some resilience in turbulent markets. Now that brings me to my two stocks. I would be looking at buying Dixon between 2770 and 2810. I expect the target of 3150 or over 2-3 weeks. I would keep levels of 2600 as a stop loss. The other thing that I'm looking at would be at Coforge, buying Coforge at 4370 with the target of 4550 and stop loss of 4290.
All right, Dixon Tech and Coforge are two of Milan's stock recommendations for this morning. Good. Thanks a lot for taking out time and joining us this morning, Milan. We look forward to having you on the show more frequently.
Thank you so much.
Thank you. Well, with that, we're completely timed out on this edition of Morning Trade, but don't go anywhere because coming up next is Opening Bell.